Markets are always volatile in the short run. But look at this. The volatility decreases as we look at the long term. Last 5 years CAGR of index is around 15%, which is way better than fixed deposits. And this return is also despite the fact that we were suffering from pandemic, then we had Russia-Ukraine crisis, and we also had post-COVID economic crisis. So this actually makes indices one of the best investment option. Now we have found out a way to invest in indices smartly. How? Let me tell you. So what we've observed is that index has 50 stocks, right? So not all 50 stocks are responsible to pull the markets up. There are some stocks which are actually dragging the indices down. So if we can easily filter out these stocks, then we can easily beat index. We call this portfolio Smart Index Advantage. So what happens is, here we pick out the large cap index and then we filter out the stocks which we think would underperform. So first category of stocks that we filter out is the public sector undertakings. So we believe that PSUs are not a suitable investment option. Historically also they have not performed well, although in the short run they have given good returns, but we still don't rely them for long-term growth. Next is large cap index contains multiple companies of a single sector. So now we will filter out stocks which has the highest growth potential and the best fundamentals among those sectors, and we will add it to your portfolio. Then we will look at the valuation. Obviously not all companies of the large cap index are at their best valuation, and there is no point of investing in quality stocks if they are overvalued. So we will filter out the stocks which are overvalued than their fundamentals. Next, we will screen out the stock on the basis of the ESG risk. So ESG stands for environmental, social and governance. So we rate the companies and then we pick out the companies which has the lowest ESG risk. Now if you look at it, we picked up a large cap index. Then we filtered out the most underperforming, overvalued and high risk companies. And now what we are left with is 10 to 15 very high quality companies which are going to be actually responsible to pull the indices up. Now throughout your subscription, our team of experts will very closely follow these stocks for you. And with regular rebalances, we will update you of any profit booking or any new buying opportunities. We will be sending you these rebalancing updates over email and WhatsApp. Just make sure that you don't miss out on any communication from our end. Now the minimum investment amount of Smart Index Advantage is around 1 lakh rupees. But we would recommend you to invest at least 3 to 5 lakh rupees annually to keep your expense ratio under check. You can invest through SIPs and lump sum. And yes, you can advise through SIPs, and we even advise investing through SIPs as it will build in a good discipline and it will average out the cost of your holding. Once you've invested the minimum investment amount, you can start an SIP which is as low as 5,000 rupees. And lastly, if you're still confused, don't worry, just schedule a call with us and our experts will help you out to pick the right small case for you. Stock market investments are subject to market risk. Please read offer documents carefully before investing.